In this video, I want to talk about how the tax brackets work. In this example, I'm using a single tax filing tax rate schedule. The book has this on page, let's see here. I don't have the page in front of me, but it is in the textbook. Chapter 1 goes into the tax computation. And again, remember, for 2021, there are 7 income tax brackets: 10%, 12%, 22, 24, 32, 35, and 37%. Those are going to be represented on the right side, the far right column, where it says the tax is. All right, so this column here, we go down, we see the 10%, the 12, the 22, 24, 32, 35, and 37. You see, as you make more income, you fall into these bands, right? And as you move into another band, you pay more of a percentage of that next band. So let's walk through an example here. This again is the single tax rate schedule. If you were dealing with somebody who was married filing jointly, they would have their own table that would look like this. The percentages would be in different places, the income limits would be different, but the methodology and the process is the exact same, just using different number bands here. And by number bands, I mean the 0 to 9950, the 9950 to 4525, etc. All right, so let's say we have a single taxpayer. In the year 2021, they had taxable income of, let's go 50,000. So let's say that this taxpayer, I'm going to scroll down just a little bit, try to keep as much detail as I can here. All right. So we have a taxpayer with 50,000 taxable income. All right. I'm going to walk through this top to bottom so we can see how it works. So the first $9,950 of this taxpayer's money is going to be taxed at 10%. Or 10% times 99.50 is $995. So I'm going to keep a running tally here, and then we'll do it another way at the end. So the first band, we'll say here, I'll put in parentheses the amount of tax paid here. All right, keeping a tally. Within this next band, we take the income, so they have 50,000, so it exceeds this band here of 40,525. We take this 40,525 and we subtract out the 99.50 that we've already paid taxes on, because remember up here we've already applied the 10%, 995. So I'm going to bring my calculator over so we can do this together. All right, so in this particular example, we're going to take that 40,525 as given to us in the second column there. We're going to subtract out the 99.50. We're going to multiply this. Remember, this is 12% times 0.12. That's going to give us $3,669. Put it right here. All right. And then in my final band here, because the taxpayer's income is $50,000, it does not exceed this band, so it's going to fall within this band here. This is where it's going to end. All right. So then what we do is we take that 50,000 here and we subtract 40,525. All right. And just for a reference, this is the 22% band. All right. So let's go ahead and we'll do this. This is going to be the 50,000 minus the 4525 gives us $9,475 of income in this band, multiplied by, again, 22%. $2,084.50. So $2,084.50. $2,084.5. Another way that we can do this, so you'll see this. The reason I do this is because I want to walk through the process so we can understand the the graduated tax brackets. As you make more income, you pay more of a share of that income in taxes for the band. All right, so when somebody says that, oh, I don't want to make more money, I'm going to put myself into a higher tax bracket, these are the brackets that they're talking about. This is a bracket, this is a bracket, that's a bracket, 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 and then the topmost bracket is 37%. All right. That doesn't mean you pay 37% on all of your income. It means you pay 37% on income over $523,600 for that tax year. All right. So with that detail, let's look at it this way. So we have, again, the taxpayer with $50,000. We see our bands. We understand how we came up with these numbers here. If we were to tally this up, it would give us a number. We'll do that here shortly. The other option we have is, because we know that this band is where this income is going to terminate because it's below that bound right there, we can take that $4,664, which is derived. So this 4,664 here is derived by taking the sum of $3,669, which, remember, we got from subtracting the $99.50 from $45.25 times 12%. That gave us $3,669. The $995 comes from taking 10% of the $99.50. When you sum these two numbers up here, 1, 2, that equals $4,664. That's how this number here is derived. So what we can do as not a cheat per se, but as a shortcut, is take that $4,664, hold that, and then take 22% of anything over $40,525. And again, remember, we know that number is $2,084.50 because we just derived that in the calculator prior by taking that 9,475 multiplied by the 22%, and that ends up equaling $2,084.50. So if we take all three numbers here, 995 plus 3,669 plus 2,084.5, we have a total tax of $6748.50. So we're going to say $6748.50. $6748.50. So that's total tax right here. I'm going to highlight this. All right, total tax. Go ahead and put a comma there just to neaten it up. All right, so total tax is, that was actually the wrong place to put the, give me 1 second, I shall fix that. All right, so let's fix this, put the comma in its right place, $6,748.50. All right, so if we want to find the effective tax rate, so we get to the end here, we see how these brackets work, but say we want to find the effective tax rate. Effective tax rate is taking that total tax, is going to be total tax divided by the taxable income. I might have that upside down, but what we'll do is take that $6748.50 divided by the 50,000. All right, so then it ends up being a 13.4% effective tax rate. 13.4% effective tax rate. All right, so that's how that's done. We've talked about the tax rate schedule and effective tax rate.